Amy O'Brien, Managing Director, Head of Responsible Investment at TIAA Global Asset Management. Nice to see you at the Milken Institute Global Conference.
Okay, thanks for having me, Rhonda.
I guess we should start with an explanation on what responsible investing means compared to, say, impact investing.
Sure. Well, responsible investment is really the umbrella term under which a lot of other disciplines reside. And at its core, it's the incorporation of environmental, social, corporate governance, and outcome measurements into investment decision making. That investment decision making can be at the research phase, during portfolio construction, or ongoing monitoring of investment portfolios.
Have we seen a steady increase in responsible investing? It used to be that it's kind of a one-off for people, but now it's very much in vogue, it seems.
Absolutely. Responsible investment is no longer a fringe concept. And I'd say that more investors than ever, both individuals and institutions, are interested in incorporating these factors into their investment decision-making processes.
What about returns? Because this has been an issue in the past. There were studies done that said, listen, if you're in a socially responsible fund, you're not going to outperform the market. So how do you reconcile that issue?
Right. Well, the conversation around ESG and impact investing is no longer about let's restrict a portfolio for certain social reasons. It's about how can these factors add value to the investment decision-making process. And we don't believe that there is a performance penalty. Certainly you have to do your homework on investment managers and fund options, but we do believe that an investor can achieve a double bottom line.
What are most products that you're seeing now? Is it primarily ETFs that drive this sector?
Yeah, well, you do see a lot of product development in recent years. For many years, the only options were really public equity, and we're seeing an expansion of mutual funds with ESG considerations. We're seeing more movement into fixed income, but ETFs have certainly been popular over the past year or so.
Are you seeing any individual public companies embrace the idea as a way to attract investors?
I do see that, and we're here at the Milken Institute Conference, and there are companies, large and small, talking about how they're embracing sustainability or ESG challenges and turning them into opportunities. Opportunities first to perhaps connect with their customer base, but also to show their investors that by baking in sustainability into their investment, into their business strategy, over the long term, this benefits shareholders as well.
Is there a rule of thumb on how much responsible investing you should have in a portfolio?
Well, we do believe that an investor can create an entire portfolio, have a total portfolio solution. And we don't see responsible investment as its own asset class, but an approach that can be applied across asset classes. So theoretically, you can look at this as an investment discipline that can be built up over time. There certainly still are some product gaps to be had or to be filled, but we see this as more of an approach than in an asset class.
How about growth outside of developed markets like the US and Europe? Are emerging markets embracing this idea at all, or is it too early?
Yeah, well, certainly the development markets are embracing it. I would argue Europe more so than the United States, Canada, Australia. These are markets that have embraced ESG. But you do see movement in emerging markets as well. I mean, many companies that are based there are suppliers to larger multinationals based in the US or in Europe. So you see a lot of those types of companies embracing this as a way to attract interest along the supply chain.
Amy O'Brien, great to chat with you about this. Thanks.
Thank you, Rhonda.